my channel. In this video, a problem is solved on preparation of a hire purchase accounts in the books of hire purchaser. Kindly watch the video till then, like it, share and subscribe the channel. If you have any comments of the video, please put your comments in the comment box. So the question is, Belagavi Company Limited purchased a computer on a hire purchase system on 1/1/2010 from Hubli Computer System. A sum of rupees 12,000 was paid on delivery as advance and balance in 4 equal annual installments of rupees 12,000 cash payable at the end of the year, that is on 31st December. The cash price of the computer was rupees 54,600. The vendor charges interest at 5% on the unpaid balance of the cash price. The vendor also charged depreciation at 10% on reducing balance method. Prepare the necessary ledger accounts in the books of Belagavi Company Limited. Now, let's move to the green board. So in this problem, we have provided with the cash price of the asset. We have given the rate of interest. Then we have given the rate of depreciation also. So now we should prepare first a hire purchase chart here. So preparation of hire purchase chart. So as we have given the cash price here, so I will write here 54,600 rupees. This is the cash price which is already given in the problem here. So now let's go for preparing the hire purchase chart. This is date column, installment, then interest column, then cash price column, so we need one more column for depreciation here. So let me write here, this is cash price, outstanding balance, and the last column depreciation. So date, installment, interest at the rate of 5% per annum, then CP, then outstanding balance, then depreciation. So the agreement is signed on 1/1/2010 here. So 1/1/2010. The down payment made here is 12,000. So no interest is payable on that. So 12,000 here. So the outstanding balance 54,600 minus 12,000. That comes to 600 here. 42,600. So the first installment becomes due on 31st 12/10. So 12,000. So 5% of 42,600, that comes to 2,130. So when we subtract this here, you will get 70 here, carry 1, 8 here, carry 1, so 9,870. So we should deduct this from the outstanding balance. So the result here is 30 here, carry 1, 60 minus 9, 7, carry 1, 12 minus 10, 2 here, 32,730. So on the second installment, it becomes due on 31st 12/2011. So 12,000 is the installment, and then 5% of 32,730. So here it comes to, so if you calculate 10%, it comes to 3,273. So half of that 1,637. So when you subtract here, 10 minus 7, 13, carry 1, 10 minus 4, 6, carry 1, 10 minus 7, 3, carry 1. So 10,363. So when you subtract this 10,363, the answer here is 10 minus 3 is 7, carry 1. 30 minus 7 6, carry 1. 7 minus 4 3. 22,367. So on 31st 12 2012, the third installment becomes due for payment. So 12,000 here. Then when you calculate interest, 5% of 22,367, that comes to rupees 1,108. So when you subtract here, you will get 10 minus 8 or 2, carry 1. So 8 here, here also 8. So 10,882. So 10,882. So when you find the difference here, 7 minus 2 5, 16 minus 8 8 here. So 30 minus 8 11, 30 minus 8 5, 30 minus 9 4 here, carry 1, 2 minus 1 1, so 11,485. Then the last installment, it becomes due on 31st to 12/13, so 12,000 here. So as it is the last year, so we should take the difference between these two here. So 12,000 minus 11,485, so the difference here is 515. So here also 11,485, so there is no any balance here. So now let's take the total of this here. So here it is 60,000 here. So now let's take the total. 7 plus 8 15 plus 5 20, carry 2 2 1 3 3 1 4 4 plus 3 7 7 plus 3 10, carry 1 here. 5 plus 1 6 plus 1 7 7 plus 6 13 13 plus 1 4, carry 1 1 plus 1 2 2 plus 1 3 3 plus 2 5. So now 60,000 minus 5,400, you will get 54,600. So now let's make the column total here. 3 plus 2 5, 5 plus 5 10, carry 1, 8 plus 9 9 plus 8 17 plus 6 23 plus 7 30, carry 3 7 15 18 26, carry 2 2 1 3 3 plus 9 12 12 plus 2 14, carry 1 1 plus 1 2 2 plus 1 3 3 plus 1 4 4 plus 1 5. Then we should calculate the depreciation here. So cash price is given as a 54,600. So first year depreciation, 10% of 54,600, that comes to 5,460. So when we subtract here 4 here, 10 minus 6 4, carry 1, 6 minus 5 1, 14 minus 5 9, so 49,140. So when you calculate depreciation for the second year, so 10% of 49,140, so 4,914. So when you take the difference here, 10 minus 4 6, carry 1, 4 minus 2 2 here, 11 minus 2 11 minus 9 2 here, carry 1, 9 minus 5 4 here, so 44,226. Then for the third year, when you calculate depreciation, so 10% of 44,226, so it comes to 4,422.6 here, so 4,423 here. So when you subtract here, 6 minus 3 3 here, then 12 2 minus 2 0, for 12 minus 4 8 here, carry 1, then 14 minus 5 9 here, so 39,803 here. So when you get so this is 4,223. Here it is so 6 minus 3 3 here, 0 here 0 here, so 40,003 here. So when you calculate depreciation for the fourth year, 10% of 40,003, that comes to 4,000. You will get a 4,000.3, so approximately this year. So 36,000 3, that is the outstanding balance here. So now let us go for preparing the accounts in the books of hire purchaser here. So in this problem we are asked to prepare necessary ledger accounts here. So we need to prepare the first vehicle asset account, that is in this problem is computer account. Then we need to prepare the hire vendors account, then interest account, then depreciation account. Usually is asked to prepare only the hire vendors account and the asset account here. So now let's start here. So in the books of hire purchaser here in this problem is Belagavi company. So Belagavi company here, computer account. So date here, amount, date, so debit, date, particulars, journal folio rupees, date, particulars, journal folio rupees, credit. So when the agreement is signed on 1/1/10 here, and the entry will be computer account debit to hire vendor. So hire vendor is Hubli company account. So it is 12,000 here. When the first installment becomes due on 31st/12/2010, then the entry will be computer account debit, interest account debit to Hubli company. So here we should take only the interest part, principal part here. So which we have written in the hire purchase chart under the CP column. So 9,870. So when we take the total here, 21,870 here. So on 31st/12/10, then when you allow depreciation here, depreciation account debit to the depreciation account debit to computer account, so computer account is credited by depreciation. So we have calculated in the hire purchase chart depreciation as 5,460. So now let us do the balancing here. So 21,870. So 0 here, 6 plus 1 7, 4 plus 4 8, 16,410. So by balance carried down on the same day, that is on 31st/12/10. So this balance is brought down on 1/1/2011. So two balance brought down. So when the balance is brought down here, it is 16,410. So when the second installment becomes due for payment on 31st/12/2011, computer account debit to Hubli company. So we should take only the principal part here. So the second year is 10,363. So now let's take the sum of this here. 3 here, 6 plus 1 7, 4 plus 3 7, 6 here, 26,773. Then here also let's write down here on 31st/12/11, when the depreciation is allowed, depreciation account debit computer account, so computer account is credited by depreciation. So the depreciation we have given in we have calculated as rupees 4,914. So now let's do the balancing here. So let us write down here by balance carried down. So the same total 26,773. 4 plus 9 13, carry 1, 1 plus 1 2, 2 plus 5 7, 9 plus 8 17, carry 1, 4 plus 1 5, 5 plus 1, it is 2 here. So check, let's check here. 9 plus 4 13 carry 1, 5 plus 1 6 plus 1 7, 9 plus 8 17 carry 1, 1 plus 1 2, 2 plus 4 6, 2 here. So on 1 1 12, so 2 balance brought down. So when the balance is brought down here, it is 21,859. So on 31st of 12 here, when third installment becomes due for payment, then it will be interest on debit, computer account debit, interest on debit or to Hubli company. So we should take only the principal part, so it is 10,882. So now let's do the totaling here. 9 plus 2 11 carry 1, 8 plus 9 plus 5 14 carry 1. So 8 plus 9 9 plus 8 17 carry 1, 1 plus 1 2, so 32,741. So on 31st 12 2012, when the depreciation load for the third year, then entry will be depreciation account debit computer account. Computer account is credited by depreciation. So we have calculated depreciation as a 4,223. So let's do the balancing here. So by balance carry down. So here it is. Now let's write down the total here, 32,741. So 3 plus 8 11 carry 1, 2 plus 1 3, 3 plus 1 4 here. So 2 plus 5 7, 4 plus 8 12 carry 1. So 28,518. So on 1 1 13, so same balance is brought down here. So 2 balance brought down. So it comes to 28,518. So on 31st 12 13, when the last installment becomes due for payment, then enter the computer account debit, interest account debit or to Hubli company here. So to Hubli company account here. So 11,485. So now let's take the total here. 8 plus 5 13 carry 1, 8 plus 9 plus 1 10 carry 1, 5 plus 5 10 carry 1, 8 plus 2 10 carry 1. So 40,003 here. So on 31st 12 13, when the depreciation is allowed, depreciation account debit to computer account. So computer account is credited by depreciation. So the last depreciation here is 4,000 here. Let's balancing here. So by balance carry down. So here it is 40,003. So the difference here is 36,003 here. So the same balance which we have arrived in the higher purchase chart. So now let us go for preparing the higher vendors account. So higher vendors account. This is a personal account. So which is very easy preparing the higher vendors account. So let me explain this here. In this problem, we are also asked to prepare the interest account also. That is very easy. That is only a transfer entries that will appear in the interest account here and even in the depreciation also. So here, let us go for preparing the Hubli company here. Hubli company is the vendor company here. So Hubli company limited. So now let's start here preparing the Hubli company limited account. So the agreement is signed on 1/1/10 here. When the down payment becomes due for payment, then the entry will be computer account debit to Hubli company account. So Hubli company account is credited by computer account So the installment here, sorry, the down payment here is, it is 12,000. So on the same day, on 1/1/10, that is paid here, then the entry will be Hubli company account debit to cash or bank account, but we should take usually bank account for transparent transactions. Then when the first installment becomes due for payment, then the entry will be on 31st/12/2011, computer account debit, interest account debit to Hubli company. So to Hubli company is credited by computer account with the principal amount of 9,870. Then by interest 2,130. So 2,130. So when the first installment is paid on 31st/12/10, then the entry will be Hubli company account debit to bank account. So the installment paid here is rupees 12,000. So now let us balance after first year here. So it is 24,000. So here also now you check the total, 7 plus 3 10 carry 1 here, 8 plus 2 10 carry 1, 9 plus 10 12 plus 2 14 carry 1. So 24,000. So there is no any balance remaining in the first year here. Similarly, we should also prepare for the second year on 31st/12/2012, because this is the date of the due date for the second installment. Then entry will be computer account debit, interest account debit to Hubli computers. So Hubli computers is credited by computer. So with the principal sum of rupees 10,363. Then by interest on the same day 1,637. So when the second installment is paid on 31st/12/2011, then the entry will be Hubli company account debit to bank account. So it is rupees 12,000. 12,000. So 7 plus 3 10 carry 1, 6 plus 10 carry 1, 6 plus 10 carry 1. So 12,000 here. So this third installment becomes due for payment on 31st/12/2013, and then it will be computer account debit, interest account debit to Hubli company. Hubli company is created by computer account. So with the principal sum of rupees 10,882. Then by interest 1,118. When the third installment is paid on 31st/12/2012, then the entry will be computer Hubli company account debit to bank account 12,000. So now when you take the total here, it is also here 12,000. Here also it is 12,000. So now the last installment, it becomes due for payment on 31st/12/2014. Then the entry will be computer account debit, interest account debit to Hubli companies. Hubli companies credited by computers 11,485. So the same day interest by interest 515. Then the last final payment, that is on 31st/12/2013. Sorry, 14 it is. This is 10. This is 10. 11 it is. This should be 12. This should be 13. Okay. So to bank account 12,000. So there will not be any balance here. There will not be any balance to be paid here, as it is the final payment. So now the assets get transferred in the name of Belagavi company here, right? So as we were asked to prepare the necessary ledger accounts here, so we should prepare now the interest account. Of course, this is a very simple one here. that is only the transfer entry we need to pass, that's all. So when the interest, so this is, of course, interest is a nominal account here. So interest account. So when the interest is payable on 31st 12 2010, then the entry will be interest account debit to Hubli company account. So to Hubli company, so first year the interest payable here is 2130. So at the end of the first year, that is on 31st 12 10, this is transferred to P&L account. So profit and loss account debit to interest account. So interest account is credited by P&L account. So that comes to 2130. So 2130. 2130. Then when the interest is payable for the second year, then the entry will be interest account debit to Hubli company account. So the second year interest here is 1637. So which is transferred to P&L account on 31st 2011. Then the entry will be profit and loss account debit to interest account. So interest account is credited by P&L account. So 1637. So here 1637, here also 1637. This is a very simple. Here, as I already told here, only the transfer entries will appear, that's all. So on 31st of 12, sorry, this is 11 here. So on 31st 12 2012, when the interest is payable for the third year, interest account debit to Hubli company account. So interest payable here, as we have given the higher purchase chart, it is 1118. So on 31st 12 2012, when this interest is transferred to P&L account here, then entry will be profit and loss account debit interest account. So interest account is credited by P&L account. So it comes to 1118. 1118. Then when the interest is paid for the last year, is on 31st 12 2013, then the entry will be interest account debit to Hubli company. So it is a 515. So 515. So when this interest is transferred at the end of the year on 31st 12 2013, then the entry will be profit and loss account debit to interest account. So interest account is stated by P&L account. So it comes to 515 here. So this account will be balanced for the last year also. So this is how we should prepare the interest account here. Similarly, we should also prepare the depreciation here. So let us go for preparing a depreciation account. This depreciation and the interest both are expenses to the hire purchaser, so that's why it will be debited to his general P&L account here. So let me show how that will come here now. So here depreciation account. So when the depreciation charged on 31st 12 2010, then the entry will be depreciation account debit to computer account. So to computer account. So the first depreciation here we have calculated as 5,460. So when this is transferred at the end of the first year, that is on 31st 12 2010, then the entry will be depreciation of profit and loss account debit to depreciation. So depreciation account is credited by P&L account. So 5,460. So this will be balanced here. So in the same fashion as we prepared interest account, in the same fashion we should prepare depreciation also here. That's all. So for the second year, that is on 31st 12 2011, when the depreciation account to computer account. So the second year, the depreciation here is 4,914, as we are calculating the higher purchase charge. So let me take the code here. So 4,914. So on 31st 12 2011, when this is transferred to account, profit loss account debit to depreciation. So depreciation is credited by P&L account. So 4,914. So 4,914. Similarly, for the third year, that is on 31st 12 2012, when the depreciation charge, depreciation account debit to computer account. So third year, the depreciation is 4,223. So when it is transferred to P&L account, profit and loss account debit to depreciation account. So depreciation is credited by P&L account. 4,223. So 4,223. Here also 4,223. So on 30, this is the last year. So on 31st 12 2013, when the depreciation is charged to charged here, then it will be computer depreciation account debit to computer account. So 4,000. So when this is transferred at the end of the year, profit and loss account debit to depreciation. So depreciation is credited by P&L account. So 4,000 here. So here, this in this year also it will be closed here. So this is how the interest account is prepared, depreciation is prepared, and the higher vendors account is prepared, and the asset account is prepared. So these are the necessary ledger accounts are to be prepared here. Thank you.